Welcome back, dear learners. Before the ad break, we were able to define the general journal, as well as to name the source document which is used to record in the general journal. And to start off with, I'm going to start off with bad debts. Bad debts. What are bad debts? What comes to your mind when you hear the word bad debts? When a debtor has not paid his debts and cannot be found, it is best for the business to write off the debt as bad debt. In other words, it is an irrecoverable debt. So all effort would have been made to try to locate the debtor and make them pay. But when all effort leads to nothing, therefore we write off that amount as bad debt. How then do we record bad debts? Remember, bad debts must be recorded in the general journal. With me here, I have two transactions which I'm going to record in the general journal. Here is the general journal. The first transaction reads, a debtor, C. Bernard, who has not paid his debt for 6 months, cannot be found. His balance of 450 in his account must be written off as irrecoverable. That means I am going to record bad debts. And the next account is C. Bernard, who is my debtor. So it is going to affect my debtor's control. The moment I have a bad debt, I have to understand that bad debt is an expense, and all my expenses must be debited. You must remember, expenses must be debited. That means when I come here, which account am I going to debit? There is my debit. I debit my bad debts. And once I have bad debts, it is decreasing what my debtors owe me. So I will then credit C. Bernard, there it is, understanding that C. Bernard is part of my debtors, so I will then credit in the debtor's control 450. That is decreasing my debtor's control in this case. The second transaction reads on the 18th, there is 18. A debtor Arbother is declared insolvent. Insolvent, again, means they cannot pay. His insolvent estate pays a first and final dividend of 20 cents in the rand, and we received 600. Right of the balance is irrecoverable. So we have a debtor, Arbother, who has been declared insolvent. They can no longer pay. But his insolvent estate pays a first and final dividend of 20 cents. So they've agreed to pay 20 cents in the rand of what Arbother was owing. And we have received 600. So the other amount has not been received. And that other amount that we have not yet received must be written off as irrecoverable. So first we need to calculate how much is the amount that must be written off as irrecoverable. In order for us to do that, you have to remember the way to calculate. It is easy. You simply say what you want over what you have. Times what you have will give you what you want. And if we're to have our figures, remember that this debtor was owing 100, that is the full amount, but they have paid 20 cents, so we have received 20. What we have not yet received is 80 cents. There it is, 80. So what we want is the 80 that we have not yet received, which is going to be written off as irrecoverable. This is what we want, 80. And what we have is what we have received, the 20 cents. And the 20 cents are equal to the 600 rands, which is this one. It therefore means the amount that we are looking for is 2,400. That becomes my bad debt amount. Remember, when you're recording bad debts in the general journal, you will debit bad debt because it is an expense. So I debit here 2,400. And I'll credit now Arbotha, who is my debtor. And once I credit Arbotha, who is my debtor, I have to understand that it does affect my debtor's control. It decreases my debtor's control because the debtor cannot pay. So I'll come to my debtor's control and I credit it now with 2,400. You totalize it. Please quickly grab your calculator. You are now saying 450 plus 2,400, you get 2,850. Let us quickly move on to the next aspect. In this case, what we have is our general journal, as you can see, and we are now going to post it to the general ledger. Let's quickly do that, posting it to the general ledger. In the general ledger, the first account is the debtor's control, which is an asset. Increases on the debit, decreases on the credit. So our balance is 200,000. However, we have some amounts which are coming from the general journal, and these amounts are on the credit side, which is 2,850. So when we come to the debtor's control, we're going to post them onto the credit side, and we say journal credits. It is from the GJ and it's 2,850. This is the same amount over there. And for us now to complete double entry, you see your 2,850 is here. But it was made up of two debtors. The first one was C. Bernard with 450, and the second one was Arbotha with 2,400. You add those two, it gives you 2,850. When you have understood that, we can then move on to the next aspect, which is the debtor's ledger. The debtor's ledger. So we are still posting from your general journal, in this case, to the debtor's ledger. And we have two debtors. The first one is C. Bernard and Arbotha. In the debtor's ledger, on the debit side, it increases. So we have a plus on the debit side and a minus on the credit. Remember to do that when you prepare your debtor's ledger. You come already, then you say on my debit, I'm just going to write debit here, you have a plus, and here it's credit, you have your minus. C. Bernard was owing us 450, and we are now going to post from the general journal. And we are told here that there is an amount of 450 that we're not going to receive again. So I'm going to now say my 450, remember, from the GJ on the credit side. So he was owing us 450, and I'm recording now on the credit side 450 because this amount is not going to be recovered. Remember, we wrote it off as a bad debt. The account then goes to zero. If we look at Arbotha, it says 3,000 is what Arbotha was owing. We have received 20 cents in the rand, and that amount was 600. There is the receipt, and the amount must be recorded in the CRJ. When we are now writing off the bad debt, so we are coming here and we're now saying from the GJ, we now have the 2,400. What we have there, the account then means you're saying 2,400 minus 2,400, you end up with nothing because the account is being written off. So when we come to our debtors ledger, these accounts now are on zero. The accounts have been written off. I am going to move on to the accounting equation. How would you do the accounting equation when you have bad debts? A debtor C. Bernard, who has not paid his debt for 6 months, cannot be found. His balance of 450 in his account must be written off as irrecoverable. We have already found that once we're writing off an account, we have bad debts. And once it's bad debts, it's an expense. Dead click, remember, dead click, that means we're going to debit our expenses. So we debit bad debts because it is an expense. When we do the dead click, here is the dead click. The dead click, we debit all expenses, assets, as well as drawings. And we'll credit our liabilities, our income, as well as our capital. We're talking owner's equity. So bad debts are an expense, hence I have debited them there. Dead click. And once I have an expense, owner's equity decreases, minus 450. And the next account to be involved is my debtors control. And I credit my debtors control, but you know, debtors control is an asset. And once your asset is being credited, that means it's decreasing, minus 450. Any effect on the liabilities? No. So you have 0. Dear learners, we're going to go for an ad break, and I'm going to see you in a short while.